Good morning, good morning. How you guys doing? Welcome. Wednesday, April 24th, 2024. Hope you guys are doing well. We're going to look at a bunch of stocks this morning. Bunch of stocks including Visa. Visa's been on my radar for some time. I mean, who doesn't want to buy and own Visa? Look at that. How does that look? You think Visa's making money off of people and their debts? Yeah, I would say so. Yeah, so we're going to look at a bunch of companies that I think are looking quite nice. And Visa's one of them. Visa, Mastercard. I was looking at Mastercard last night as well. That one looks pretty decent. Mastercard as well. But Visa, this is one that I've been watching for quite some time. It's got a nice move up. I mean, look at that. Just nice, steady rally to the upside. Yes, we had, back in March, it dropped down. Okay, just like everything else did at that time. But other than that, a nice steady increase. Okay, they pay a dividend. It's not the best dividend in the world, but they do pay a dividend for you parking your money with them. And so recently I see price retracing here, and on the weekly chart was doing some analysis, and we located this institutional buying area here in the 270s that price is reacting to right now. And the very interesting thing is that we know that the circumstance with the S&P 500 index right now is it's reacting from an institutional buying zone. So so I'm watching this area, and I'm watching for it to start building momentum to the upside, because you see price comes down to this area, all of a sudden we get the green candle to the upside. So that's a bullish indication that buying is coming in from this area. And this could be the very spot that we start to see price build momentum to the upside. So how would we know that? Well, you'd have to look at lower time frames. You'd have to look at lower time frames and the structure that's being built on the lower time frames. For instance, let's look at the 1 hour chart. And what do we see, right? For looking, isn't this what do they call these? Channels? Excuse me. I guess they call these channels, right? Where you have price action going down the channel. Okay. So what I'm looking for is I'm looking for a shift of this momentum, this structure that is geared to the downside. I'm looking for it to shift into neutral territory and then eventually bullish territory. So I'm watching for something like that as an indication that we might start getting a significant move to the upside. Okay, but Visa is one that I am watching, and we had earnings come out. Okay, Tuesday after the market, and very good earnings report. So therefore, we have that nice gap up in price. We closed at 274. Now we're up at 280, which is pretty significant. Okay, pretty significant. So I look at that, and I look at Mastercard, and what do I see? Earnings coming out soon. Not yet, but it's already gapping up. Why? Well, because Visa is doing well. If Visa is doing well, why wouldn't this one do well, right? The only problem is that when we look at the weekly chart, the institutional buying area I located was down here, and price is already reacting without contacting institutional demand. So is it possible that it's just going to start rallying? Yeah, it's possible. It's not what we'd like to see, but it's possible. All right, so I'm watching these two. I think they show a lot of promise for more upside. I mean, you can't really can't go against this trend here. This is a significant trend. All right, ever since 2006. Look, if you bought at 2006 and just held it, you would have been buying at $6. Okay, do you imagine paying into this, a portion of your paycheck? Every paycheck you get, you put 5% of it and you put into Mastercard or Visa since, the mid 2000s. Pay in, buy, no matter what price, just buy more. While everybody is spending money on their Visas and Mastercards and going over their limits because they can't control their spending, you could have been putting a portion of your paycheck into those companies. You could have been buying at 5, at 10, 20, 40, 60, 80, 100, 200, 240, 260, 280, and, now, almost reached $500. This is how they do it. This is how old money families do it. They find these great, solid companies that are well managed, that are just going to keep on going up because nothing's going to change that business. Nothing's going to interfere with their business. And they just keep putting money into it. And it's amazing for wealth creation, right? And wealth preservation, Since 2023, this was just, under $300. Okay. Has that beat inflation? Yeah, of course it has. You think the super rich are worried about inflation? Not a chance. So I was looking at GE. Did you know that GE is called GE Aerospace? I didn't come across that anywhere before. So I went on to Yahoo and I searched it up, and GE, General Electric Company. But you type in GE here and it's GE Aerospace. Like, it's the same ticker, GE, right? Am I missing something? Oh, that's New York Stock Exchange. Oh, look at that. That's why. General Electric. I see. Well, anyways, I was looking at this stock and I was like, holy moly, this one's flown like madness. And the interesting thing is it's removing massive areas of supply. Something to definitely consider. And price just came into this area of demand here. Now it's shooting like a rocket. GE Aerospace. So yeah, something to look into for sure. Okay, so I was looking at Sherwin Williams. I thought this was an interesting one to bring to your attention. So Sherwin Williams. So I think they just came out with earnings negative. And so interesting thing is that when you go online and you read the articles, they say they're not doing so well because there's a lack of interest in buying paint. Okay. Yeah, I swear I read that somewhere. You guys know Sherwin Williams. Everybody knows Sherwin Williams. Manufacture, distribution, and sale of paints, coatings, all that stuff. So their latest earnings report was not too good. But here's the interesting thing. It wasn't too good, okay. And it just came out Tuesday morning. So we gapped down and then rallied. But here's the interesting thing. all throughout here, 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 and here, there was intense buying by big money, all right? But they were buying the stock and pushing it up into an area that they were going to be selling, okay? As you can see, I've drawn an institutional supply area up here. And supply areas are usually where banks, big money will take profits on their positions. Big money will take profits on their positions. So they bought up until that area, and look what's happening now, the selling. And it would be interesting to see what was taking place with earnings as price was rallying up, right? Positive earnings on the rally up. Positive earnings after the retracement into institutional buying zones. Positive earnings as price is rallying up. Price contacts a supply area. Banks start taking profits, which causes price to drop. And now, negative. Interesting. You know, what's really fascinating is that when you understand the supply and demand dynamics, and you can locate the institutional buying and selling, and you understand through years of studying charts and studying the dynamics of the institutional buying and selling, you know, I've spent years studying the multiple time frames to discover how the banks move price from supply to demand on each time frame. There's sequences in which they follow and to get price to move from one area to another area. And when you know what those sequences are, you can see the storyline of what's taking place with price. And you understand the context of why it's taking place. You understand when you normally see that behavior in price, what's typically taking place, what's the overall storyline. And it's just remarkable when you know these things and you start looking at the news releases, the data releases, the earnings releases, and you start to think to yourself, wait a minute, is that just a coincidence, or like, what's going on here? It's just so incredibly the timing, the coincidence of how this data comes out to support institutional buying, but then when it doesn't serve their purpose anymore, all of a sudden, you know, it's quite interesting. But when I see these things, I point them out because I want you guys to see what I am seeing. Okay? When you guys start to see these little things, you start asking yourself the same questions I've been asking myself for quite some time. So I just thought that was very interesting. You know, institutional buying down at the lows of 220, taking it up to 340 to take profits. And then it starts to drop after good earnings, right? And then after three consecutive good earnings releases to get price all the way up there, you know, retail traders don't realize that price is entering into a supply zone. They have no clue. And they have no idea what happens when price hits a supply zone. They don't understand the context of price. So they just see really good earnings reports. Price is just about to break out to new highs. So they start buying. Why? Where? At the highs. And that's exactly where the institutions are looking to take profits on those positions, right? At those highs. Okay. So now we're getting the push to the downside. And the interesting thing is we get this negative earnings release. What's going to happen next is, remember the SPY is hitting institutional demand. Don't forget that. Which means over time, we could see price start to shoot up. So if the institutions were satisfied with this amount of profit from their long positions and they're looking to start getting back in, maybe they would use something like a negative earnings report. where retail traders who bought at 340, maybe they're going to bail at 300, maybe under 300, especially after a bad earnings report and bad forward guidance. They're going to look at that and say, oh, this doesn't look good. They bail on their positions. And then who comes in as the savior to take over those positions? Obviously, the big institutions, right? So when you start to follow the storyline and you start to see what might be taking place, your mind starts creating a scenario of what is likely going to take place. And then I take note of these scenarios, and I record these tickers, and I make notes on my charts. And then later on, I go back just to see if my logic was in line with the reality. And it's remarkable to see the results after the fact. Just remarkable. So just keep your eye on that one. We'll both keep our eye on it, and we'll get back to it at another time on another show. Lockheed Martin, they just came out with good earnings. Big company. Everybody knows them. Major buying coming into play here is what I'll let you know about. In the 400s. That's big institutional buying happening here in the 400s, okay? And we just shot through a roadblock here on the daily time frame. But on the weekly, we are responding to an institutional selling area, okay? So right now we're gapping down. No big deal. That's mostly from the pressure from that selling area. Probably some profit taking place on long positions that they probably acquired down here at the 420s, okay, which is the demand area. But over time, this chart is looking good for a continued move to the upside. Okay, here's a 6-month chart. I mean, can you argue with that? Not really, right? So, just some things to think about. Meta. So Meta is going to be coming out with earnings after hours today, Wednesday, April 22nd. A lot of speculation what's going to happen. You know, Meta dipped down to the $100 area. Wow. And then look at the rally that came after that. 100 to 500. This was just pre-2023. Incredible rally. Is it being supported by institutional buying? Yes, I'd say so. Okay. Would I be buying up here? I don't buy unless it's hitting areas of demand. And so after significant moves to the upside, you know, there's nothing to see there. I'm not going to be buying after significant moves to the upside. Although if price was to retrace and contact areas of demand, yeah, I'd be interested. So, looks good. I just would not be buying at these highs, okay? And let's go to Mara. Remember Mara? Do you remember Mara? I hope you do. So we're going to talk about it here for 1 second. Because you remember when it contacted the supply area I had drawn? A lot of people were speculating, should I buy at $30? No. Why? Because supply came into play. And then what happened? It dropped down to contact where? An institutional demand zone. What happened? They bought it up from $16 back up to supply at $30. Doubled. Doubled in a matter of a couple of weeks. Okay? Now look where we're at again. Back to demand. Okay? Up, down, up, down. So essentially we're holding a range here between weekly supply and weekly demand. So if price is going to go lower, we would need demand to break. If price is going to go higher, we need supply to break. Okay? Until then, range will hold. But it's just amazing that dynamic that came into play here on the weekly chart. We had these zones drawn out for you, and I showed you how they were coming into play. And soon the volatility will slow down, and then there will be a break to the upside or a break to the downside. I mean, we previously got up to where, $80 or so? Yeah. Previously we got up to $80. So what's going to happen? Don't know. But just wanted to pass on that dynamic of what's playing out, okay? All right. That's it for today. Those are the charts I wanted to show you. All right. And if you're interested in joining us, you should be joining us. If you're interested in learning how to draw the supply and demand, how to do the analysis that we do, how to apply the Sherlock system to the charts, you should come and join us, whiteoakfx.com. Here's our pricing plans. We have a basic membership, student access, and you can also get a yearly membership. Right now, if you join and become a student, you can type in discount code 6 for savings of $53.64 for 6 months. And discount code 12 for savings of $214 for 12 months. And this is what you get access to when you become a student. Full library of video lessons, all the things that I've learned over the many years of studying the markets, using philosophical principles, applying philosophical principles to the charts, and exploring the charts and extracting information that you've never seen before. Promise you that. All right, folks, that's it. So I hope you enjoy it. And if you want to come and learn and you want to have a completely different perspective on the markets, I encourage you to join. All right. Thanks again for joining. I appreciate it. You have yourself a good one, and we'll talk to you soon. Take care.